other source of income meaning. Sorry. Right. Good afternoon. Let us start. Okay. Can you hear me? Hello? Can you hear me? Mr. Perra, can you hear me? Hello?
Yes. This one.
Yeah, right. Right, okay, thanks. Right, last Saturday we discussed how to compute the profit from trade. The main thing is the taxation is to identify the source of income according in terms of Sri Lankan tax laws and also the Inland Act. The section 3 describes the varieties of sources. Section 3A describes the profit from trade. 3B discuss the profit from employment. Section 3C deals with the how to net annual value. Section 3D deals with the occupier's income. Section E describe the dividend, interest or discount. Section F charges or annuities. Likewise, section again G rent, royalties and premium. H winning lotteries or the gambling activities. And also there are some other, if any income do not fall to above source of income, we call other source of income. Likewise, this is a very important section of the Inland Act, the source of income. And also other important sections, section 2, that is the chargeability. Section 3, Inland Act number 10 of 2006, section 2 describes the chargeability or the imposition of the income tax, and also section 3A deals with the section 3 deals with the source of income, subsection 3A deal with the profit from trade. Then last Saturday we discussed how to compute the profit from trade. All the source of the section 3 describe the source of income. Also the other section describe how to compute the profit from each source of income. That day I explained in the last Saturday, for the purpose ascertain profit from trade, the profit is the profit which is computed in accordance with the accepted principle commercial accountancy. In Sri Lanka, all the commercial in commercial accounting, Institute of Chartered Accountants Sri Lanka has published some standards, and they have gazetted it. Now first step is we take the profit ascertained with the accounting standard. For the purpose of taxation, for the requirement of charge from trade, we have to adjust this such profit in accordance with the requirement of section 25 and 26. Section 25 is very clearly explained that certain any outgoing or expenses incurred by the production of income, any income, but including, but that means all the income can be claimed if the expenditure or the outgoing is related to the production of income, and including. The including in section 25 I have given the word document, all the what are the in that case normal commercial accountants practice commercial accounting, capital expenditures are not allowed. When we compute the profit from trade for a commercial accountancy, we are not normally capital expenditure is not allowed. But section 25 says even some capital expenditure or allowed in case of computing of the agricultural business. Some capital expenditures also allowed likewise. But same way, say for a purpose accountant, principles of commercial accounting, all the expenses are allowed. But according to requirement section 26, some expenses are not allowed. But if the minister gazetted or in budget announce each and everywhere what are the allowable deductions and what are the disallowable deductions for the purpose of taxation. Then amendments come to the section 25 of the section 26. Says one good example is advertising is a revenue nature of expenditure for the purpose of commercial practice of accountancy. According to the standard, expenditures are allowed. But for the purpose of taxation from the profit from trade, but requirement of section 26 is 25% of the advertisement is not allowed. Likewise, foreign traveling expenditure is allowable deduction, but in some cases up to some extent they allowed under section 26, but some are not allowed. For the purpose of commercial accountancy, economic depreciation is allowed. But according to the taxation rule, depreciation is not allowed, but the allowed capital allowance as rate is specified by the minister time to time. Now, accordingly, these days 20% of capital allowance is allowed for the motor vehicle, 33% is 3%, 1/3 for the plant and machinery. In some cases, 100% of capital expenditure is allowed, especially special investments are made by a company and purchase some plant and high-tech machinery. They are entitled to claim the 100% of capital allowance. That means within the year, whole amount of capital expenditure can be claimed. But in commercial economy, normally economic depreciation is allowed. Likewise, there are difference between profit from trade according to the accounting standard and also for the purpose of taxation, right? Then you all have to read the section 25 and 26 and all requirements of section 25 and 26, right? Then on that way, profit from trade is computed. That is one source of income. Very especially in some cases, say the rent income, take rent income or the interest income. Interest income is separate source of income under the Inland Revenue Act. Interest income is section 3E describe the interest income as separate source of income. Section 3E is the dividend interest or the discount. If it is tax interest in case of banks, for individual, if anyone deposits in the excess money in bank and receiving interest, there is his interest income. If he invest in debentures or in treasury bill or treasury bonds or any kind of financial instrument, and he received interest as a return of their investment, that is we call the interest income on the hands of the recipient. In case of individual, all these are his interest income. But in case of banks or financial institutions, they also receiving the interest for the customer advances. In such cases, that become the gross turn of the financial institutions. There is one difference, but section, as I said, each and the Inland Act describe how to compute the taxable income source under each category of sources. Say the section 3A says the trade profit to be computed in accordance with the requirement of section 25 and 26. 3B deal with the section 4 again. Section 4 of the Inland Act deal with the how to compute the employment income. 3B described as a source of income. Section 4 fully describe how to compute the profit from employee. Then we say all the cash benefit and non-cash benefits come under the employment income. Likewise, now question arises how to compute the again interest income of a person. Right. Then as I said, section 4 of the Illinois Act describes how to compute the employment income. Section 3B recognized as a source of income. Again, section 4 describes how to compute the employment income of the employee. Likewise, but again, now question is how to compute the interest income. But for interest income, there is no separate section to describing how to compute the interest income of the individual. As far as interest income become the source of income chargeable under section 3E, no any deductions are allowed. That is deal with the section 25(4) of the Illinois Act. Very special section, but if you read the Illinois Act, only for knowledge, section 25(4) subsection deal with the compute the interest income. That means no any deductions are allowed in ascertaining the interest income in case of a individual or partnership businesses. No any, but if interest income become the part of the business of trade, bank or finance institution, then all the deductions are allowed. In some cases, interest income is derived from the customer advances all, but they are paying interest for their deposit holders, or that means they are borrowing. Like there is difference between interest is, there are two colors are changed when it is become a part of the trade and become the separate source of income. Separate source of income. Likewise, today we discussed again here clearly I repeated the source of income. Section 3A for the profit from trade, B right. Then dividend income. Dividend income are not described by the madam, no. Describe, no? Dividend is explain. Discuss, no? Right. Then I skip this one. Dividend income is only for a gross dividend. In case of individual, the gross dividend is taxable only for explanation knowledge. Dividend is the gross income. If the dividend tax has been deducted, it is a final tax under the hand of the recipient. Only that part we must learn that one. But anyway, for a purpose of taxation, corporate taxation, dividend is we have to discuss very comprehensively. Then it is not as a dividend income, right? In case of company has to declare the dividend and pay the dividend tax. Now we have learned in this subject the early sessions as a source of income under the hand of the recipients, right? That means that in the shareholders' hand. But in corporate taxation, the corporate has to pay two types of taxes: corporate tax plus, once the dividend is declared, they have to pay dividend tax. On that, when we discuss the corporate taxation, we discuss the dividend taxation of dividend by companies. Right. Now again, section charges annuities. She has madam not discussed, no? All right. Now we discuss net annuity or madam discuss, right? Now today we discuss the royalty income. The word term of royalty is not defined in that. In normal in general we know royalty is used paid by someone if someone is used others property or the intellectual property, the trade name or trade formula or the scientific formula is used and paid some amount, that is we call that is as royalty. In some cases, the word royalty is not defined in the Illinois Act. Some double tax avoidance agreement has defined the word of royalty. So, according to the general meaning, the royalty is usage-based payment made by one party to another for the right to ongoing use of assets including an intellectual property. Royalties are typically agreed upon as a percentage of gross or net revenue derived from the use of an asset or fixed price per unit sold of item. But there are also other models and metrics of compensation. Take very clear example, if we take the Unilever PLC. The Unilever PLC has a lot of trade Vim, Signal, all are very famous trade name in the Sri Lanka. But all the trade names belongs to the Unilever UK Limited. But in Sri Lanka, Unilever Sri Lanka is produced Vim and the Signal toothbrushes under the trade name of Vim and the Signal. For that purpose, they are paying some royalties. Why? For that purpose, they have all the multinational companies. They have established their subsidiaries in other countries, and the other subsidiaries have been given to right to manufacture their product based on their formulas, and also they are allowed to use the trade names. Like take the Reckitt Benckiser, so the very famous brand of mosquito oil, one called yes, what? Martin mosquito oils. That is the trade name is Reckitt Benckiser. But each and everywhere they are paying royalty per usage of that's a word of trade name of Martin. Likewise, there are several. Take the very up to very recent, the Holcim Blanca. The Holcim is a very Swiss-based cement manufacturing company, very famous cement company, the famous trade name. The Holcim Sri Lanka paid royalty for the use of the name of the Holcim. But they, in some cases, they paid the number of item used or the turnover, the net base of the base agreed upon the part. They can agree the 2% of the turnover, the 3% of the turnover. For that, if some cases, some companies, multinationals charge more large volume of the royalty to the reduce the tax liability in Sri Lanka. If the Sri Lankan company paid more as royalty, that become the expenditure of this company. Accordingly, they can reduce their liability. The royalty tax rate of 10% as the recipient hand, right? For that purpose, royalty is used to arrange their tax, arrange their tax payable, arrange their tax payable. They always try to minimize their tax rate. The royalty payment is normally used to reduce their tax liability. If the royalty is paid more, become the deductible expenditure. Accordingly, they can reduce their profitability and then profit is taxed as normal rate. The recipient hand, although these have become the income, they are paying, applying the lesser rate of tax. If the recipient paid 10%, but the paying company reduced the liability at same amount for a 28% of taxes. Right. Likewise, in case of now royalty, in case of now we are learning as a source of income, not as the payer's hand. Royalty is the word what is discussed in multinational companies, and also in in Sri Lanka, any country negotiate double tax avoiding agreement, they make some adjustment for the royalty income, how to tax the royalty income, recipient income, and how to tax in the paying country. Likewise, but in case of, according to Inland Revenue Act number 10 of 2006, so the requirement of section 3E, royalty become a source of income. In case of individual, no any deductions are allowed. When the royalty is computed, no deductions is allowed. When we compute the trade profit, deductions are allowed. When we compute the net revenue, we deduct the 25% of repair allowance. When you compute the rent income, we allow the rates and the 25 years, 5 years repairs allowance. But in case of interest, as we said, no deductions are allowed. But in same time, royalty income, no any deductions are allowed. The amount is charged when we compute the taxable income of the individual. Then here only we learn as a source of income. Therefore, these sections are involved in double tax agreements and also the payer's hand. We will discuss when we discuss the corporate taxation. Here always, we have to learn royalty both recipient hand and the paid hand. Once paid, others is received. Now, in this session, we are learning royalty recipient's hand as a source of income. In individual, no any deductions are allowed. If we receive the gross income, that is his gross income. In some cases, if we receive the royalty from other country, the paying country tax administrator has deducted taxes, right? In such cases, they have issued a certificate saying that, say that our Indian company in Sri Lanka receive royalty from, in very famous case in Sri Lanka, you all must learn, the famous business gentleman called Sena Yaddehike, he is the owner of the major shareholder of the Arpico Richard Pierce Group. All the papers says he is receiving some royalty from once he has some patent rights, and for that patent right is used by the motor vehicle manufacturers, and the companies are paying royalties for the right holder. Likewise, then the paying countries, when the payment is made, their country's requirement is deduct some taxes in their and pay the recipient, right? In such cases, if some taxes has been deducted in their country, the recipient country claim as a tax credit, but we take the gross amount as royalty income. Ultimately, we will learn that how to compute statutory income, measurable and taxable income, tax computation, how to compute tax payable. Once the tax payable is computed, if any taxes has been deducted as withholding taxes on royalty, that become the tax credit. Like that means he has already paid taxes. Say, now there are some other areas to be learned. Say, if someone is receiving royalty in Sri Lanka, Sri Lankan individual receive from the other Sri Lankan company or the individual, then that type of royalty is chargeable in the tax act. But say, in some cases, royalty received in foreign currency from outside Sri Lanka, then that type of royalty is not subject to taxes. You all have to read again section 2 of the Inland Act, very, very most important act of the Inland Act. The income shall, subject to position of this act, be charged at the appropriate rate, especially and the first, second, third, fourth and fifth schedule to this act for every year assessment commencing on or after April 2006, respect to the profit and income of every person of that year of assessment. Then, subject to person of this man, you see the here now royalty exempted from taxes under some section, then not become subject to taxes. Why? Tax is charged subject to the provision of this. One provision said, if someone receives the royalty from outside Sri Lanka in foreign currency, that royalty is not subject to taxes. Then if you very clear, if you follow the chargeability imposition of taxes, that means section 2 income tax shall subject to the provision that be charged. Now this royalty is not, any royalty received from foreign currency is not charged. Why? That some exemptions are granted. say there are some requirement. If someone need to get this exemption for a royalty, he can receive in foreign currency, but it should be remitted to Sri Lanka through a bank. If we if we remit the money not the channel of banks, in other way, any other channel, no exemptions is allowed. If someone is need to get the exemption from the royalty which he received in foreign currency in the out of Sri Lanka, he must bring the such currency through a formal banking mechanism. That means through a bank. Right, and same way we as this stage we must know why this type of rules have been introduced by the purpose of the exemption is to encourage remittance of foreign currency to Sri Lanka. As in case of exemption of the same basis and profit from employment, interest income, we learn even interest income. If someone has deposited their foreign currency in foreign currency bank account and receiving interest, that type of interest is not subject to taxes. Therefore, interest income also, interest income is generally charged for income tax, but some exemptions are available. Likewise, in case of dividend income, some dividend income is exempted. Say very recently government introduced, if someone is invest more than 100 million rupees in new investments, the investment in the manufacturing undertaking of the product for exports and derive profit and declare the dividend, no dividend tax is charged. That means the recipient is not subject, the recipient get the full amount of dividend without deducting tax. The very last, just 2015 budget announced that any investment more than 100 million and invest in the manufacturing undertaking for the production of goods for export. But if someone is invest in manufacturing and taking production of goods, but or for a local market and derive profit and declare dividend, that dividend is subject to tax. But for a profit derived from the manufacturing good manufactured export by a manufacturer, then he can, if he declare the dividend out of profit, he can claim that dividend is not subject to tax. That means this shareholder and then also the in other terms the recipient, the dividend recipient is not subject to tax. Say again the receipt of the royalty by a non-resident person from a BOI company where the agreement was entered into before April 2004. Now any agreement entered after the 1st April 2004 and the company paid royalty and in such royalty in recipient hand is subject to taxes. But this one 2005 now any royalty received by the BOI company is subject to taxes. This is the requirement. Discount also section 3E describe royalty and premium income. See, then one has to say what is the royalty and premium income. We learned how to compute the rent income, no? Madam explained, no? Rent income is very simple formula. Only for a gross rent we deduct the rates paid, and from residue we deduct the 25 repairs allowance, whether it is incurred or not. If the agreement says the tenant meet the repair expenses, then only rate is allowed, right? Depending on the clause of the agreements, right? In the premium income is not always, we can't. Very rarely we are finding that type of income derived to individual. Normally in normal course of business, once one business place is renting, some people take some key money. That's one standard for payments. Say take some very valuable business premises located and given in rent. First they charge some key money. not the advance, right? Not the, we must distinguish rent advance and the premium, key money in the rent. In the case of rent, premium is if any transaction, if someone paid more than the transaction value, that is we call the premium. Say in issuing shares, some premium is charged. Other one is charges and annuities. Section 3, these are the, then we try to learn what are the charges and annuity. Discount also source of income arising from discounting of bills of exchange, certificate or deposits. Only for a premium income is source of income arise to a person who receives some in excess of entitlement. Say, only for in case of rent premises, he entitled to get the rent income. He can get the rent in advance. That is the end. But if he say receive more than that receipt is we call as premium. Example here, key money. Full amount is a premium to be taxed at the year in with the amount received. In such cases, the tax is charged in cash basis. Normally, the very special thing in the taxation, the section 28 is very clearly described. Section 28, in income tax is charged in accrual basis. If is as far as act is especially specified cash basis to be adopted. But the key money, in case of key money, we apply the cash base. Even fixed deposits, we in case of individual, the recipient hand when we tax as cash basis, not at the accrual basis. Say the one that deposits is matured in after 1 year or 2 years, sometime middle of the year of assessment. But sometime if we are going to tax at accrual basis without receiving the interest to the deposit holder, we have to collect the taxes. No cash flow to pay the taxes, and therefore the provide to some concession to the deposit holders. They apply the cash basis in case of interest income. Check me, yes. Yeah, taxable. Again, the income tax is charged on the varieties of income. These are the income: profit from trade, profit from employment, net annual value, dividend, interest, discount, gross annuities, rent, royalty and premium. If someone asks on what basis you are charged the key money for a tax, then we say under section 2, any profit and see, these are very important section starting the taxation. We have repeatedly read this section. Section 2 says income tax shall subject when this be charged at the appropriate rate is for the first and second, third and fourth schedule to the set for every year assessment on no after in respect of the profit and income of every person. Then now income tax charged on the profit and income of every person. Now for the any year where in case of Sri Lanka, income derived on Sri Lanka. In case of non-resident, income derived only in case of resident. In case of income derived Sri Lanka, where but in case of non-resident, only income derived from Sri Lanka. Right, again, you have to elaborate this one only for in this stage. Then income tax shall be charged profit and income. Now for the section 3 again you read start for these are profit and income. Profit or income means now profit and income is described. Now if someone asks on what basis key money is charged, we say key money is the profit and income as described in the section 3E 3G of the Inland Revenue Act number 10 of 2006. Again you can emphasize section 2 very especially say income tax shall be charged from profit and income. They are connecting these two sections. We can very clearly emphasize that key money is charged under the Inland Revenue income is charged on section 2 and as in the section 3G as source of income. Likewise, all the income. If someone asks why you are taxing royalty, we can say the royalty income is the profit and income as described in section 3, and also such profit and income is charged under the section 2 as the chargeability. Right. In some cases, very rarely if someone asks, they receive key money and they say ask some deduction, some expenditure. Right? The Act does not provide any rules to allow any expenditure. But in some cases, some people are negotiating this type of business. Then they have to pay some commission. Then in that cases, he says, I have paid some commission to get this key money. Then they ask for a deduct. Then the normal, fundamentally we are taxing the income derived. No? On that basis, key money is not derived. We should not tax. No? On that basis, some commission has paid by the recipient to get the business of key money. Then that type of expenditure is allowed. These are practical matter on the tax that depend on the discretion of the tax administrators. Right. Likewise, now section 3F of the Inland Revenue Act recognizes that the charges or annuities as source of income, which is chargeable under Income Tax Act. A charge is usually an annual payment which is secured to income of property or another. Right? Charges and annuity both are going together. The annuity is a fixed sum received annual but does not fall to a capital nature. The following characteristics may exist in annuity. See, the annuity is in Sri Lanka, in Inland Revenue Act, and also in practical we have experienced that lot of people are receiving annuity. Once is paying annuity, in recipient is the receipt of annuity, right? Now in here, as a source of income, now we are learning the recipient hand. Now if some annuity is received to some individual, that annuity is subject to taxes. Normally, annuity is paid in annual basis, but if someone is paid some capital amounts for once and all to get into some obligation, that does not come under the annuity. Annuity must be regularly paying for an annual basis. Right, now let us see now what are the characteristics of the annuity. See, the word annuity has not been defined in the Act. For that purpose, some people, the Act says annuity is as a source of income, and same way annuity is a deductible expenditure and the payer's hand. The one is received, that is become the income, in payer's hand that become expenditure, right? We learned how to compute the statutory income and assessable income of individual. Then when we compute the assessable income of individual, we deduct annuity paid by individual. Then, though the Indian Act does not define the word of annuity, we can find some definition from the decided tax cases. In some cases, the Rajaratnam case, you can CIT means Commission of Income Tax. See, in decided case of Rajaratnam, CIT means Commission of Income Tax. Now we have the Commissioner General of Inland Revenue. Versus means Ediriva, Rajaratnam Ediriva, Commissaris Income Tax. Adayam Badu Commissaries, right? 3C remain in Sri Lanka. In Sri Lanka, income tax was established in 1932. Income tax act is administered from 1930 to up to now 2016. When we issue the assessment to collect taxes for a tax, there are some unclear areas. Department is department issued assessment for the taxpayers. The taxpayers do not agree with the department computation of the assessment. He can make an appeal. Under the appeal procedure, the appeal goes to up to the Supreme Court. Early days, before they get the independence, the cases went to the Privy Council. In that case, the Rajaratnam, the gentleman Rajaratnam, he had 3 brothers. This case was decided not as a recipient. Mr. Rajaratnam paid annuity to his brothers and deduct as a deduction from the statutory income. Then department did not allow that deduction and asked this is not an annuity as you described. But Mr. Rajaratnam appealed and he argued the appeal. Then only for a general knowledge, said in first step that all the registered taxpayers have to submit a return of income to the tax department. In Sri Lanka, we have a self-assessment tax system. Then the person who has income more than 500,000 according to the existing law under this source of income, then we know the source of income. Any of the sources he has exceed his income more than 500,000 per year, then he is liable to pay income tax. He must voluntarily, that means switcha, when he must go to the department, ask to open a tax file and get the registration number, and he has to start to pay taxes. Then department issue the return for income tax, return of income. We do not say return of income tax. We say the return of income. Return means Adayam Badu Varta. Return of income is Adayam Badu Varta. But he has to the tax is in a year assessment basis. Say, then once individual is registered for the taxes, each and every year he receives the copy of the return of income from the tax department. Then he has to submit if before 30th November after the year of succeeding year of following the year of assessment. Then say for year of assessment 15 and 16, he should furnish his return of income 30th November 2016. End of the year of November 30th November, end of the year of assessment. Then he voluntarily declared this income. Then officers of the Inland Revenue Department has the right to accept or reject that return. Or normally Act say either assistant commissioner can accept or does not accept. Say it does not accept means he reject their return. Say in some cases say that he has a big business, when he compute his profit from trade, he has charged his private expenditure, and thereby he reduces his profit from trade. Once the officer is found that mistake, he disallowed that expenditure and issue the assessment. Then taxpayer can say, no, this is, though you have categorized as my private expenditure, these are the business expenditure, and he can give the full details. For that purpose, within the 30 days of receiving the notice of assessment, taxpayer can make an appeal to the Commissioner General. Then Commissioner General have to hear that appeal. First step is one assistant commissioner hear the appeal and with the taxpayer. Then he try to reach an agreement with the taxpayers to settle the appeal. Say, though the taxpayer has made an appeal, assistant commissioner called for a settlement of the appeal, taxpayer, no agreement is between the parties. Assistant Commissioner and the taxpayer. Then Commissioner General have to hear the appeal. Why? No agreement reached between the Assistant Commissioner and the taxpayer. Likewise, there are some hierarchy of high appeal hearing hierarchy. First step is the Assistant Commissioner, then Commissioner General, third is the Tax Appeal Commission, Court of Appeal and Supreme Court. Now there are 5 appeal tribunal hierarchy in Inland Acts. First the hearing appeal by the Assistant Commissioner, second step is the hearing by the Commissioner General, third step is the hearing by the Tax Appeal Commission, fourth is the Court of Appeal and the fifth is the Supreme Court. Likewise, tax cases go up to the Supreme Court. Likewise, in those days, that's the way of appealing. If the court is, if the case is gone to the court, appeal court and Supreme Court, that then we call these are the decided cases. Likewise, from year 32 to up to now, in Sri Lanka, we have 4 volumes of tax cases, that we compiled tax cases into books. That we call the volume. Likewise, we have now, that means we have now one book called 1 CTC, second book says 2 CTC, third one here third CTCs, volume 3 of Sri Lanka tax cases. Now fourth one is, we are not taking the CTC word, Sri Lankan SLTC. Fourth volume we call for SLTC, Sri Lanka tax cases. We will give some reference for the SLTC also. Then here the 378 is the page number. Now if you go to the, if you take the volume 3 of our tax cases and 307, if you get the 378 page, you can read the Rajaratnam versus. Next time I will bring some books to show you the one volume, then 317. In that case, right? In that case, these are the findings. The court listened to the both parties and the facts of the case and decided on that way. It must be with a reference to an year. If annuity is that here, the payer's hand case was decided. He deducted this as expenditure annuity. The court had to decide whether it is an annuity or not. If it is annuity, is deductible. If it is not annuity, not deductible. Not be a recipient accrual of a capital nature to the recipient. That must be a cash base, be made on the legal obligation. Only per se the in divorce cases, the court divorce cases, husband if the divorce in in lot of cases, the husband had to pay some annuity for the divorcee. Yes, likewise. Be made under legal only one some example. In divorce cases, there are court cases, court obligation. Court decided pay this amount per a month. Then in that cases, or the court decide for annual or the monthly basis pay. The base must be base, but decide for a annual. For a, say if you the court decided for 60,000 per annum, they have to pay 5,000 per month. Likewise, in recipient, in that case, Mr. Rajaratnam paid and claim as a deduction. In that case, to allow that deduction, this case was discussed at the court. Will be a pure income or profit of the recipient or the payer, right? Again, court said, if you are paying, you deduct, but in recipient hand, it is an income. Now we are here learning the recipient hands income as on the recipient hands. The annuity becomes if anyone receive more than 500,000 of annuity, that means even say the in divorced lady, the wife receiving some 600,000 of annuity for his ex-husband, then he can, that is that income is charged on the electrons, he has to pay taxes. In Sri Lanka, there are a lot of cases, some receiving more than 500,000 of annuities and they are paying taxes. In that case, the code disappeared. If payers deducting as a expenditure from the extraordinary income in the recipient hand, it must be income under chargeable under section 3. Interest charge 3F of the Land Act. Courts decide if the recipient hand it by the income. These are the characteristics of the annuity. It must be noted that any payment as annuity deductible from extraordinary income of the payer. When we can learn this one when we compute the tax liability of the individual. Only now still we are learning here the how to compute the profit and income from each source. No, 3, not the 3G, 3F, under the 3F, here we have to change this one. A person who income liability, income tax, no, right, sorry. Now here other source, right? Right, now we know, we discuss some decided cases till that. Now we discuss other source of income. Winning lottery from, right? Before this section is introduced in the Indian Act, say if someone buy a tickets, say the sweep ticket, if you won, it is not regularly recurring, no. Very rarely people win a sweep ticket. That type of income we normally call casual and non-recurring nature income. Income which is called recurring or non, is not regularly recurring within a sweep tickets. Right, but very recently, government issued some taxes once the winning of lotteries paid by lottery boards or the organizer of the lotteries. They have to deduct 10% of the winning amount. Right? Say for that purpose, if the amount also described here, if the gross amount exceeds 500,000, the payer has to deduct 10% of withhold tax and send it to the tax department. Say another one is not the lottery, even gambling business. Say in Sri Lanka, is the horse racing and the casino and all, if they are paying winning more than 500,000, they have to deduct 10% of tax and remit to the tax department, 90% to be paid to the winner. For that purpose, to charge that tax, to deduct 10%, income must be charged, otherwise no tax. For that purpose, the section 3H was into the Indian Act. Why? The payer has, the organizers has to deduct tax where the payment is more than 500,000. If any winning payment is less than 500, 10% is not deducted. That means not subject to taxes. That means any person who receive more than 500,000 of winning upon lotteries or the gambling, he is liable to pay income tax. Whether pay has not deducted 10% or not, but anyway, but the Inland Act imposes the liability to the payer. If you are paying winning amounts from lotteries or the gambling, you deduct 10% for the gross winning, remit to the tax department, you pay the 90% to the winner of the lottery or the gambling. To charge the tax on the winner's hand, the income, the winning is to be recognized as the source of income under the Inland Act, and therefore this also as a profit and source of income under the heading of profit and income. Profit and income include now varieties of the profit, trade, employment, and rent. Like now come to the winning from lottery and betting and gambling also. Now it's the individual, in the hand of individual, and 10% is deducted, no further taxation. Normally Sri Lanka individual's income is taxed up to 24%. Now if 10% is deducted, no further taxation. Say even billion, even in past few days, in some cases, in lottery boards paid more than 90 million of winning. Only 9 million was tax deducted and 82 million was paid to the winner. But there's a final tax. But only then he need not to furnish income tax for the department. Why? That become the final tax. If any withhold tax is deducted for the payment of winning of lottery or the gambling, that is become the final tax. We will learn later when we compute the taxable income, the statutory income, assessable income, and the tax liability of the individual. If someone is received less than 500,000, not become the statutory income, right? Say some businessman, he has so many sources of income and won 450,000 lottery or the casino, but no subject tax. Though the tax 10% is not deducted, not further, that income is not aggregate with the is other source of other income, right? That if the winning amount is less than 500, does not become part of the statutory income. They say the individual has a lot of source of income. You have the trade income, interest income, employment income, dividend, rent and all, and same way he has received the 300,000 less than 500,000 winning, that not become the statutory income. Right? Up to now, say, now up to I, we describe the source of income. We know what are the winning of lottery, rent, we have some label. But one can say he has income, but he can't describe it. In what source? That type of income falls to the any other source of incomes that described under section F. J, section J of the Land Revenue Act. Any other income from any other source whatsoever, not including profit of a casual and non-recurring nature. Right. Here, say one person, if he running on the roads, in walk, he found purse containing big amount. Say he find parcel has 2 million. He try to find who is the owner, but he can't find it even. Even say he try to find the owner, but cannot be found. Then it becomes his income. No, that say that type of income not recurring again and again. The same following day walk same road, he can't find such type of thing. That type of income is incurring for the people. Say likewise, if some other cases we can consider as a gift. Say if someone is the swimming in the swimming pool, if he in danger, one can come and he is secured, can give some money. Then that type of thing we can label as a gift, but that type of things not become the income. Here, the income is, according to the Inland Revenue Act, tax is charged, profit per income. Even income, if the income is casual and non-recurring nature, that type of income also is not subject to taxes. There must be a recurring. Before this section, I give a very good example: winning from lottery and betting and gambling. Before very recently, this section charge the three HOs introduced. Before that, no tax was charged for the lottery or the gambling, right? There was a gentleman called Madon. He is a very rich people in this country. He has a hobby was horse racing. He has for that purpose he went to Nuvareli, I visit and he watched in live the horse racing, right? And also you can see some papers in the horse racing business places. Some small paper people are putting and selecting horses, and the is running in the UK and there. But here people, the betting for the race, winning horse, right? Likewise, then gentlemen, for that purpose, in some cases, see what the live horse racing, Mr. Madonsa, and put some bets. He for that purpose, he employed some clerk to read every day for that paper. He identified the winning horses and on put the frequency of the winning chances and the probability of winning, and considering all this probability and frequency of winnings, he puts on that way. Then on that way he earns lot of big money through the horse racing, right? Then in that case, for that purpose, he paid some salary for his clerk. The gentleman, when he submit the return, he declared some income from this horse racing and said, this is not this income is a non-recurring, casual income. But department said, no, you did as a trade. Other people did it as a, in someone is going to the, that place and win a bet, very rarely they are winning. But he said in a very systematic way, regularly he did it. Then he organized as is a business, and court decided that type of arrangement is amount to the business of horse business. The regular income, not the recurring and not the casual or non-recurring. That type of income is recurring. Why? Is regularly doing the betting of horse racing. Then in that case, as court decided, if it is the organizer someone is doing, that is recurring, and then in that income is charged, right? But anyway, only we have identified here. There are some any other sources. It is very difficult to put into one specified sources, but we have exclude the casual and non-recurring nature. That, as I said, if someone is find some purse, that there is not become the income of a person. So now this section, capital gain. Say if you read this one, you can't find capital gain. In Sri Lanka, lot of people in Sri Lanka in the current these days, lot of big business people buy apartments and keep some period and selling it higher value. In some people take once the building is advertised, not is constructed, only in the planning stage. When he address in paper, they receive 3 or 4 and pay the advance. Once the apartment is constructed, then higher values come and he can dispose and making profit. That type of income we call as a capital gain. Why? These are capital transaction. But capital transactions were not subject to tax under the Inland Act of number 10 of 2006. Here all the income has been categorized, but capital gain has not been categorized as a source of income. But you all know very recent budget, government Minister of Finance announced in very recent budget, profit arise on the properties is any profit or gain arise on the sale of movable properties is immovable properties is subject to, that means government has now introduced the capital gain taxation, not for a whole capital gains, only for a profit from immovable properties like land and the building if the ownership is keep less than 10 years. But if someone has bought it before 10 years and sell it, that capital gain is not taxed. But rules come, but subject the capital gain is taxed from the year of 1 for 2017. The recent budget proposal come into operation from with effect from 1st April 2017. Right? Now, for your general knowledge, but before this number 10 of 2000 introduced, we have the act called number 30 of 2000. In that act, the chargeability section 3A described the capital gain, right? Section 7 describes what are the capital gain, right? No, you all must learn with the capital gain taxes in all the tax administrators in the world, they collect the capital gain. More revenue they derive from the all tax administrators in the world. They have into the capital gain. In Sri Lanka, very past 10 12 years we have not taxed capital gain. Now again we introduce, right? On this transaction, capital gain is derived, right? Only for general knowledge. This is the section. If someone is interested to read the section Inland Act number 30 of 2000, and if we can find section 3, it has capital gain as a source of income. Section 3I of the section, right? Right? The word capital gain is comprehensively described in section 7. These are the transactions: change of ownership of any property occurring in any manner, the surrender of relinquish any right of any property. That means, say, any intellectual property, they can sell it, and also right of any property, redemption of shares, debentures, obligation, formation on like in these taxes also people are receiving some money. That income was recognized as a capital gain. Right? In recent budget only we introduced the capital gain on immovable land and building. Again we have discussed, but no, 1st April 2002 capital gain was abolished. Up to now that we taxed. You know, the capital gain was introduced in 1957. And the Sri Lanka as we learned 32 income tax was into Sri Lanka, but in Sri Lanka 1957 up to now capital gain tax was not there, but up to 57 the one gentleman called Caldor, he came from England and studied whether Sri Lanka the possibility of introduction of the capital gain tax into the Sri Lanka. Mr. Caldor studied the capital transaction of this country, how many what the prerequisites the land and the immovable transaction, in the share trade, in the prerequisites of selling of shares by the people and the companies. Likewise, they analyze the nature of transaction, volume of capital transaction, and accordingly, the Caldor proposed to introduce the capital gain tax. And why? Some people has just a very fair income from the capital gain income, but they have not paid taxes. Why? It has not been charged under the Income Tax Act, but when the Income Tax Act recognized as is a source of income and chargeable under section 2 and the profit and income, then it came into then capital gain was introduced and taxed. The same time we must learn this one, because now in coming to in future, then as I said, we know how to compute the profit from trade. The requirement is section 25 and 6, allowable and disallowable. Rent income, we know the rates and the repair allowances. Net and value only for 25% for the rating adjustment. Likewise, capital gain also, the Act had defined how to compute the capital gain, especially the cost involved and the sales services involved. In Sri Lanka from 17 and 18 the capital gain tax is come into operation, then we must know how to compute the capital gain from the land and building transaction. Then we must know how to compute the next inland amendment, we introduce how to compute the way of computing capital gain. Then immediately involve the cost. If in case of land, the cost in the purchase cost plus stamp duty and the lowest piece, that become the cost. In addition that he can make some improvement to the lands, right? Then we all become the capital or the expenditure. Say if you put a wall or the well, big well in the lands, they become the capital expenditure. Then these are the improvement. These become the cost. When he sell the properties, he put in advertisement, then incurred some advertisement expenditure, and also if he had to pay some brokerage fees, these are the then selling price. He can do the cost and improvement established lower piece and the other brokerage and all. Then he have to compute the capital gain from the capital transaction. If the government introduces for the capital gain taxation of share trading also, then they when cost involved for the cost and the sale price is involved. If individual has buy shares and keeps some period and selling it, then become he derive the capital gain from the disposal of investment. Likewise, now still we have, early we had, now still so far only we introduce in recent budget only for a capital gain on land and building. Right. Abolish. Right. Now we learn how, only these are the now, up to now we learn the source of income. Then we have to learn how to compute the again, when we identify the source of income, lot of question arises. We learn what are the question arises and what are the gray areas and what are the unsettled areas and what are the cases arise on this source of income. Right. We take little short break and come. Right, thanks. Right. Now we learned that depreciation, when we compute the profit from trade, depreciation is not allowed, but capital allowance is allowed. In normal course of business, in times, some assets, new assets are purchased, old assets are disposed. Then, according to the normal commercial practice of accountancy, when they dispose item, they compute the book profit on the disposal of fixed assets. Then they take the cost of acquisition of the cost and the depreciation charge and the balance. Then they from the cost they deduct the depreciation charge and and selling price. They compute the profit from trade. That is normal book profit they compute. But in case of for the taxation, we allow the capital allowance on the assets. Then the profit to be computed considering the capital allowance allowed for the such fixed assets. Then if it is a book profit or the book loss, we neutral the position. And if they have made a profit, we add it to the profit If again he has made a loss, we deduct the loss. Even in this normal book loss, we adjust the loss or the profit and allowed the loss from the disposal considered in the capital allowances graph on that way. If any assets which is allowed capital allowances and disposed, we have to compute the profit or the loss from the disposal of capital assets. Then this is the way that we compute the such profit or the loss. Say this one. Example, the same. A person has sold a machinery in investment 2014 for sum of 3 million. He has acquired this machinery during the investment 2011 for sum of 3.5 million for his business. The profit to this was reported in the account amount of 1 million because according to their depreciation rates applied for the depreciation, they charge in depreciation and accordingly they have computed 1 million. 1 million. That means according to this one, they had charged 200 million of 2 million of 3 million property sale price, right? That means they have charged some acquired this machinery during the year 3.5 million, right? Then that means up to 2.5 million they have depreciated and accordingly they are compared to 1 million they profit. But say that in that particular assets, capital allowance allowed only 12.5. In some cases, plant and machinery we allowed 33 1/3. Here I say that this machinery related to office furniture on that way they have claimed the 12.5. Say depend on the rates. Right here, one can simply say the question why 12.5 is applied. Normally, plant and machinery we applied the 33 1/3, in some cases 50%, in some cases 100%. But here 12.1 applies since this machinery has categorized. Though this machinery comes under the plant and furniture and equipments, on that way they only claim the 12.5. On that assess, on that way the profit is computed on that way. For 3 years, year of assessment, that means they have purchased 2010 11, that means 10 11 11 12 12 13, that means 3 years they had claim, right? For 3 million 3.5 million, here we have to add other, right? $3.5 million, 12.1 they have claimed 1,312,500 capital allowances. Then depreciation claim of this one, this is the, in that way if you compute the profit comes to 812,500. This is the formula that should be depreciation claim allowances with the word the cost 3 million, tax return 3.5 million. Here right, sorry, the tax return value, cut this one and right, this 3.5 million. Allowances claim 1.1 million 302,500. Tax value is, sorry, again this, sorry, Cut. Right. Right. Now we can add this one. They have purchased shares for 3 million, 3 years capital loss they have claimed. For 3 years, for each year they, that means 1/8 of the 3.5 million. Like only they have claimed 3 years. 3 years come 2010-11 they have claimed, 11-12 claimed, 12-13 claim. Right? Capital loss claim for a, they can, if the machines is purchased for a 3.5 million in 2011, the entire tax is 12.5, they can claim over the 8 years. After 3 years, they have disposed this machinery. That means they have claimed 3 years. That means the 1/8 of the 3.5 million for 3 years. That amount equal to 1.3 million. That then we arrive the tax written down value. That we use these words in computation. Then the difference between tax written down value and the tax profit is the tax profit. Right? Then if you think, read this one and then you can adjust this one. Then in that case, if we adjust this one, first we reduce them. If the book profit we reduce from the profit, right? The book profit is there, we reduce the book profit, and in this case, now book profit is 1 million, we reduce from the profit 10, add to 812,000. Where they will say, if this assets is disposed after 8 years for this amount, for 3 million, what will be the tax written down value? Become the nil. The depreciation charge of 8 years, 12.5 into 8 years, no? Then come the 3.5 million. Then tax written value will be nil. Then total value will be the 3 million. Value come the, say, if any capital assets which was disposed had claimed fully capital allowances, then full proceed become the taxable profits. In some cases there will be losses also, right? But anyway, adjusted this profit to loss is allowed, not the book profit or the loss. First step is the neutral. We will learn how to adjust this one in the computation, right? The same theory is applied, say in this particular case, there will be a tax loss, right? The same we have to adjust this one, right? The same formula to be applied for the any asset disposal, any lease asset disposal. Say there are two ways of acquisition of fixed assets. One way is outright purchase, other one is a finance lease. Then we have distinguished for two type of lease. One is the operating lease and the finance lease. If the operating lease is there, the ownership is with the other party. Only they use. In financial assets, lease even exclusive ownership with the lessor. But anyway, you know the lessor had the exclusive ownership, but lessee claim the lessees are not allowed to claim capital allowance. Why? Ownership is not there. Capital allowance is claimed on leases for the lessor. Say the Lanka Leasing is the leasing company, they can capital allowance for all these lease assets. But lessee, as when they pay the lease renters, they claim the lease interest plus the capital portion. Again, apply the formula of the, we restrict according to the rate of capital allowances, right? If it is a furniture and fittings which is claimed under 25%, maximum need 1/4. The motor vehicle capital allowance rate is 20%. That means over the 5 years capital allowance is allowed. Likewise, we exceed 1/5. If it is a plant and machinery, the capital allowance is claimed at rate of 33%. Here limit is 1/3, right? Total lease. He can, if any, say that take a motor vehicle, now total lease assets, he can claim restrict 1/5. If you have paid more than 1/5 of the lease, that amount is not allowed. Say if someone has lease for, then definitely total lease rental lease exceed the 1/5 of the total lease. That part is disallowed. Right? If we take an example for this one, for a motor vehicle, say if the motor vehicle is leased, take for a monthly rental lease, we take 1 million or 100,000. If we lease for a 4 years, means 48 installments, right? Then he had to pay total lease value equal to 4.8 million. If any motor vehicle lease for a monthly of 100,000, that means 48 installment means total lease value is 4.8. But according to the law, for a say, if he paid only for 1.2 million per he has paid. In second year he paid 1.2 million of lease rental. But here the restriction under section 26, it must be restricted 1/5 of the total lease 48 million, 1/5 come 960,000. But he has paid 1.2 million, then 240,000 is disallowed, right? On that way lease disallowed, right? But here we are learning how to compute the profit arising on the disposal of lease assets. Then two adjustments are involved. When we claim the capital lease rentals, there are some restrictions subject to these rules, right? In such as disposal, again we have to apply the same rule. What is the amount of lease allowed? The same formula, right? Again, that day we explain in motive. Right. These are some, again, vehicle used for traveling purpose other than following. If any vehicle used for a traveling purpose, we are not allowing capital allowances, then we are not compute the profit from trade. Why? We are not allowed the capital allowances, right? That type profit was normally we treat as a capital gain, right? Right. That document also you have to read and understand. Right. Then I said there are so many sources of income. Profit from trade, profit from employment, profit from rent, annuity, dividends, other source of income. Then this case is annuity. Here one other case, right? Earlier the Rajaratnam case, then here that case also here we are discussed. He had two brothers. They are two brothers. They were child. Was as elder, Mr. Rajan was elder brother. He entered into agreement with his two brothers to pay some annuity for 7 years. Oh, if he died before that, which it becomes shorter. If he before 7 years he died, no annuity is paid. But why he is not allowed to pay annuity? That was in that case, Rajaram was allowed more than 7 years. But Mr. Rajathan pay 100,000, 1,500 per annual payment to his brothers. Then the two brothers he paid 300,000. His own brothers. But the big families, likewise, when the parents died, he said to his elder, you have to look after your brothers. For that purpose, his neighbors, once they become bigger and bigger, since the since things are changed, is related, the relation said you come for an agreement with your two brothers. Then two brothers also have some security, on that pay entered agreement, written agreement. That type of agreement is reached before his relations. Others are influenced to go for an agreement. Otherwise, sometimes if the elder brother get married and went away, brothers will be alone, no? Avoid all those things. In this culture, I don't know. But anyway, they have entered the agreement that the Rajaratnam paid that. He is a taxpayer. But here also, case involved. Mr. Rajaratnam as a taxpayer, he had so many sources of income and he deducted, annuity is a deductible expenditure from the statutory income. He learned that later. Then he deducted 3,000 for his statutory income. Officers of the tax department says, this is not the annuity. This is as your normal living. When you are alive, you have to pay this type of amounts to look after your brothers. This is not a deductible annuity or like that. But Rajaratnam said, no, this I have executed an agreement and I annually pay this amount. I have bound to pay this one. My two brothers are recipient this amount. Like that he said, and he make a appeal and case went to the court. Then court decided whether Rajaratnam is entitled to deduct 1,500 of annuity as a deduction from the statutory income. Then court decided, as we learned, if it is, it must be within reference to a year, though it may be paid in periodics, right? Annual payment paid in monthly. A lot of divorce cases, they are annual payment agreed and paid in months. Sometimes payment is late, they can pay two installment twice as agreement. On that day, court is allowed the agreement to pay 1.2 million per year. Then 100,000 has to pay per month. No? If 1 month in delay, he can pay 200,000 in second month. Court is allowed that type of agreements and all. Even that also is recorded. If any delay in second month, he can pay. If no delay in third month, or if any delays, interest accrued and like that wise. If it is not paid, it is a violation of the agreement. Likewise, here they agreed, then court very comprehensively studied the clause of agreement and all. Then they identified their parents died. Rajan had to look after these two brothers. For that purpose, secure the life of his two brothers. He entered written agreement was they have entered into the written agreement to pay the annual pay. They are not described as an annuity. They are normally described as some annual payment. But he claimed as an annuity. They were right. On that way, then court separate. If it is a periodic payments and annual payment, then that is one characteristic of the annuity. And also, not be a receipt or accrual of capital nature. Is here not a say if he paid the land for his brother, not or he gave some gift and all. That is not the capital. That means that this means the recurring, the revenue nature. The brothers are in a position to spend that money immediately. That becomes his income. In payers, the Rajaratnam is will be expenditure in recipient and brothers, and that is income. If the income is 100,000, is in those days the threshold of tax is 100,500. Say that according to current, if the amount is 600,000, he has to, as the recipient has to pay taxes as a annuity income, right? That's why here court decided be under legal obligation either recurrent or cable recurrent, but income or profit of the pay. The pure income of the profit of the pay. The section the annuity is the under section 3F, annuities become the profit and income, right? Then here If these characteristics are there in the agreement, that type of payments become the annuity. In this particular agreements, the word of annuity had not been used. But assuming the Rajaratnam, this type of payments for of annuity, he claimed the deduction. Then court had to decide that an annuity in income is not limited to any annuity purchase with some money, but extend to the other annual payment. Right? That means it is normally this case went to the Privy Council also. Right? So those days. See? 9. So in the Privy Council also comprehensively lengthily studied the Supreme Court decision, and they also agreed with the Supreme Court decision. So the Appeal Commission put it. So their lordship of the Privy Council were in agreement with the Supreme Court decision that the payment under these deed can fairly be described as annuity. They added that the wording of section 26 of stamp say there are other facts they have considered for what is the annuity and all on that way. Say, right? Now if someone has declared this type of income, say according to current law, one gentleman has lady say he has declared 1.2 million of the recipient of some the divorce case. The lady is divorce lady is receiving 1.2 million. He thinks he is a public sector employee and having some other source of income also. Then according to the Inland Act, that type of income comes to the meaning of profit and income under section 3, chargeable with income tax under section 2. Then she has to declare that income. But say without knowing all those things, she says this type of income is not a income chargeable with income tax. If she not declare that income, right? She can avoid the payment of taxes without. She does know this type of income is. People do not know about the annuity and all. They don't know the meaning of this one. Annuity means varsik in Sinhala. Then in such cases, say the department if receive some information regarding that lady receive 1.2 million of annual income of the piece from his ex-husband, then department has to assess that income for that lady, right? Then we have to label this what source of under what source that income is charged. Then department has to establish matter, right? You are receiving some annual payment is paid on decision, right? Some periodical payment in annual. Then if all these characters are there, that term payments become the annuities. Whether the agreement does not describe the payment is annuity or not, the recipient has to declare it as a income chargeable under the income tax act under the section section 3F of the Inland Act. Says other type of case, the Vikramasinghe versus CIT. Say, then you can immediately identify how to be receiving the source of income. The taxpayer was an ex-civil servant and government pensioner. He was appointed as an arbitrator by the Colombo Municipal Council in arbitration proceeding connected with the purchase by the Council of the Colombo Tramways. He received a fee of 15,000 rupees for acting as arbitrator. Those days is 1916 and 15, this 50,000 now equal to millions, right? It was said that this was not profitable, casual and undeclared in nature. But the gentleman was a taxpayer and he said, this is not this type of income is not recurring again. casual. This type of income is casual and non-recurring, and therefore not taxed. See the act section F, we say income from any other source whatsoever, including profit of a casual and non-recurring nature. That gentleman described as a non-recurring nature and did not pay tax. The department said no. This type of income, again and again, you can recur. This you are a civil servant, you are government pension, you have such knowledge of this one. You can again, you will become the arbitrator for any other also. There is some possibility to recurring that type of income, and therefore said this type of income come under the other source of income, not the employment income. Can be described as the employment income? No, he is not the employee. Can be treated as the trade income? This is not the trade, no rent or anything. No. Then that type of payment source go on to the other source of income. Right? The court, it was held, its court decided this was not a profit for casual and non-recurring nature and was a taxable. The reasoning for the reason is that this could be possibility of the recurring of this income, recurrence of this income. Again and again it can be recurred. If say it will be arbitrary for the other cases even, right? The Namashivam case also like that way. Taxpayer was carrying on a business in partnership in 1942. Shipment of the rice and bran valued at rupees 207,000 consigned to the firm was lost in transit due to the enemy action. During the Second World War, the company has imported some rice and bran. Then, without identifying it as commercial ships, enemies had fired to it, and then they lost their good on the ships. But all the consortium of the enemy properties, right, made a good the loss. You know the parties who involved in the war, where any loss incurred by other parties paid the compensation. Right? On that way, that the gentleman received this amount as the compensation. Then department argument was this type of receipt also become the part of the taxable income. But the Mr. Namashivam Chettiar is the part of the one, this participant, they appealed the assessment, and the case went to the courts. Then court decided, they said we import rice for India and all on the way to the in the area of the, you can mention the sea and all. They establish the case and say, in their counsellors argued this, say this type of income do not come to any other source. It cannot be recurring again and again. Very rarely this type of things are happening. On that this was happened, they got the opportunity to get this type of compensation. Sometimes the compensation is not paid, what will happen? Entire loss. On that basis, court till this come to that type of income is not liable to tax. Right. Here then again we have learned some area of the taxation. In the current days, say all the good stocks of the goods of the business, they insured. Any business, they even lorry and even they insure, and they are regularly paying annual insurance premium for the loss. There are a lot of categories, varieties of insurance. Fire, lot of areas are covered. Sometimes fire, flood, the other accidents, in everything. Say if some business they insured their existing stock on fire, they are regularly paying insurance, but there is a deductible expenditure for the purpose of ascertaining the profit from trade. Insurance is deductible expenditure. Why? There is a business expenditure. Say the part of the one source of the good or the warehouse was got fire or the goods were lost, they receive the insurance. That receipt is the loss is we can adjust for a trading accounts, and the normally cost of sales is adjusted to the cost of good loss is adjusted to the trade account. Pure loss is charged to the profit and loss account. But in such cases, insurance is received, it has to be treated as a income from the other side. That is the receipt of the sale of goods. But any proceeds, insurance proceeds received on the insured, that become the income of revenue nature. That type of income to be treated as income. That is the provision has been made in the section 79. No, there are some section in the Inland Act. If any insurance receive again the stock insured, that must be treated as a income. I will reference of this how and what section insurance is charged as income for the purpose of ascertaining the profit from trade, right? Right. You can read that this here are the two cases related to Commissioner of Income Tax versus Kausaji Nilgiri, and these are, you can read all those things also. You can read now you can identify what in Sri Lanka. Very recent case I'll explain you. One company called subsidiary of the DFCC, Lanka Ventures. In that company, the venture capital company main business is they should invest in the other risk undertaking. Then profit was exempted. Venture capital company's main object is investing in risk undertaking. That means they have to invest in the risk undertaking. If any profit derived from that profit business is exempted from the taxes, right? Any venture capital company's profit is exempted from income tax under the Inland Act. But the Lanka Ventures, they had some excess money and deposit in treasury bill and bonds and bank deposits, and they derived interest income, right? They had some interest income, and they said that is interest income also part and parcel of the venture capital business, and claim the exemption, right? They did not separate the interest income of the as separate source. They said this is all the part and parcel of the venture capital business, and they claimed the exemption. They did not pay taxes. The Department Inland Revenue said no. The profit of venture capital is exempted. We agreed, but profit of interest income is not exempted. Then DFCC, the main company, they argued up to the court of appeal. Then court of appeal decided whether interest income is chargeable or not. Interest income is chargeable as separate source of income of the Lanka Ventures. Then court decided. They went to the study the full case of the things, and also identify what is the objective of the establishing of venture capital. What is the objective behind the giving tax exemption of the profit of the venture capital? Then court identified, yes, tax exemption is given for the venture capital business, since they have to invest in risk undertaking. It is very, the probability is the making profit is less if the risk is there. But if anyone is invested risk undertaking and make a profit, profit is exempted. But court said, but in your case, the investing in treasury bonds or the deposits, there is no any risk. Income is secured, and therefore interest income is liable as separate source of income. On that day, Lanka venture case was decided. Right? Likewise, there are a lot of cases. Only I have given all these things to get the understanding how we separate the source of income of the business. Right. Other one also. Say, in very recent case, you all know the Ceylon Steel Corporation. They are manufacturing of steel. They also claim the tax exemption for their profit for the expansion of their business to expansion upgrade of their manufacturing business. The particular steel corporation, they imported some wires, some wires, steel wires, and sell in the market. For that purpose, they entered with the BOI agreement with the BOI for the investment. BOI, under the BOI agreement, they were given some exemption for the income taxes. Right? They claim the tax exemption under the BOI law. But department will say, establish the case, tax exemptions were given for the profit derived from the expansion and upgrade of the manufacturing business, not for the profit of the import and selling. The BOI agreement says any profit derived from the expansion and upgrade of the manufacturing of steel is exempted. But exempted is a particular purpose of the business. But if they again that get the approval from BOI to do that one and import some wire rod and sell. The wire rod means small things, wires to get it, put it to binding wires. When he layers steel and binding together, they import that one, very small thickness. That steel of the binding of the import and sell in the market. But the BOI allow only for manufacturing. In such cases, even the profit is to be separated. On that way, that type of things must be very carefully. We have to understand if there are two type of business are existed. We have to compute the profit separately. Exempt profit compute separately, and the business other profit to be, say that in same case, one business is manufacturing profit is taxed in lower rate and other profits are taxed in higher rates. Then separately we have to compute the profit. Though there are no business within the same business, even there may be different business line, manufacturing line, distribution line. Same way, they some in some business they take only for a commission. Likewise, there may be different line of business. Within one business, there may be different line of business. Within one trade, there may be different line of business. Right? Then in that cases, even we have to separately identify the profit from each business. Right. This is one model question, right? Mr. Jayant Brand, he has some industries, JF industries, and also he has some trading business, JF trading, central trading. There are a lot of business. People like that. Some people take the Tilakavardhana. When you're on the road, you can see the Tilakavardhana Putya, Tilakavardhana Cellular, Tilakavardhana Textile, like so many different type of business, no? Same time he has a hotel in other area, likewise, likewise, in some time you may become the partners, likewise, only for general knowledge, you can, that type of boards are visible in the towns, right? The same person has different type of business, right? He has given, here is small. The Mr. Jayanthan is a proprietor of J Industries, which is engaged in the business of manufacture rubber gloves, and J Trading, which engaged in the business of buying and selling of motor vehicle spare part. He is also the partner of the partners in business of central trading stores. He has provided following information related to his business for the year of 2014 and 15. Only he just here only turn of the business for the year was 115 million. According to profit and loss account prepared for the year of end 31st, business loss was 500,000 after charging follows among other expenses, right? Then only you are given the JF industry some information. Their turnover you have been given, and also the the result was given, the 500,000. Then we assume that profit is ascertained in accordance with the principles of commercial account, right? He has prepared this business from, if it is not even, but anyway he has prepared on that basis, he has given the result, and now he has given, but information given after charging following among other expenses. Some expenses have been charged, but this is also including, say that here cost of increment to the factory building 150,000. Now this the cost of payment, say this type of expenditure are nature of capital. Normally arriving at the business profit, capital expenditures are not allowed. Only we allowed the any expenditure of outgoing income to production of income. Here cost of payment is the capital expenditure. Then value is increase of the capital, then it is not deductible in prima facie. If it is say that if we attach some other if the flow area has been extend, then it become the depend on the nature, right? If it is if someone has say that I have put the cost improvement to factor 150, if someone can add it to the profit, say in one student, say in that amount is very 150, very small amount. If we put a note, say in that 150 is not as improvement made to the factory building. When we detail analyze the nature of expenditure, I found that this is only for repair expenditure and allowed. That is also correct answer. No, one can ask that one, right? That depends on the nature of business. That's here. Address expense 680,000. This amount includes sales commission paid 200,000 and pay per address expense of recruitment employees 8,000. See, the advertising 680,000 given the details, no? But what is the lower requirement in advertising? 25% is disallowed under section 26. But here commission is allowable deduction fully, no? Now we have to correctly ascertain what is the advertisement expenditure and disallow the 25%. I try to evaluate knowledge of how he identify the advertising. See, amount of sales commission paid this, any expenditure for the incurred for the production of income fully allowed. Advertisement for the recruitment employees, that is also business. These are not the advertisement for a business. Then in that case, only we have to get the 200,000 we have to deduct, and only for 400,000 we have to disallow the 25%. That is the rationale behind that. We all have to learn that. The amount of employees' contribution provident fund was 300,000 and employees, these are allowable deduction, a sum of 2, he see this one, D1, a sum of 2 billion is spent to purchase lorry and 500,000 is spent for a fixed and aluminium bottle lorry in April 2014. 500 is charged to the profit and loss account. Right. Now, here, fixed lorry also the added the value of the motor vehicle. Now, 500 to be not allowed. 2.5 million is entitled for the capital allowances on that way, right? The amount written off 40,000 in respect of the loan given to Mr. Sugat, who is an employee of the business, right? Is a business expenditure? No. He is an employee. Say, if this is the debtor become a bad, then we employ this type of is not the business, right? Then not a round and pen was 210,000. Round and is allowable deduction. Loss of cash 200. The cash was burgled an employer, and the cash loss represents sales money of the day. Right? Cash loss represents the cash was burgled by the employer, and the cash loss represents the sales money of the day. Right? This case, right? The sales money, very difficult to decide whether it is expenditure, income, product on income or not. They also, you all know the company called Haley's, the very old company. The Haley's company had a branch in Gaul. They were engaged in the business of rubber. They had appointed the manager for the Gaul branch. Each and every day, all the sales amount they deposit in the bank, and following they bring the money and do the transaction. One day, the business money was taken by a thief, stolen. Then Haley's company, they know the exact value of the money they burgled, and they categorize as business expenditure and charge it to the P&L and ascertain the profit and loss accordingly. There is a company. Then the department officers, when they examined the account, they found cash loss was deducted as expenditure. Then immediately they disallow that amount, and department comes with it and issue the assessment asking pay more taxes. The company said they appeal, and then case went to the court. Then court had to decide the cash theft is allowable deduction or not. They for that purpose, the both for the department, tax department, attorney general department appeared. For other cases, other lawyers appeared. Both parties gave argument. The court had to decide whether it is capital allowable or disallowable deduction. The court said that there are in all ways. In that case, they said that the section started any expenditure or outgo incurred for the production of income. Then the court had to decide under what headings that type of loss is possible, whether it is outgoing or the expense. Expense we can very clear. If we are paying light bill, we are paying and get the receipt. That is a payment. That type of expense. Electricity bill, salaries, telephone, any other expenses. We can physically know the transaction. We are receiving some gain for that one. Say, if a vehicle when you use, the value is depreciated. We don't know exact value. Still, that type of things are come as outgoings. The court decided. Why legislator put the outgoing and expenses? You expenses you can identify, some other things are not identified, but it still is a expenditure for the business. Then take the Ceylon Petrol Corporation and now the Lanka India Oil, or the take small these petrol fuel stations. Each and every day when they pump into the, some part is evaporating, but total amount cannot be so keep it in the that type of things come as our office has identified. You have bought 50,000 of the liters of petrol, but you have only sold 49,000, and we are going to assess 100,000. We can say we have rated 100,000, not 1,000, but depend on the amount of rating. But that things as outgoings. On that way, courts applied. In any business, there are two types of capital. One is circulating capital, other is a fixed capital. Right? They are very good, the things in the taxation and as well as in the purpose of commercial accountancy. Any business capital consists of two types: circulating capital and the fixed capital. Any loss related to the fixed capital is a capital loss. Any loss related to the circulating capital is the revenue loss. On that form, that principle is adopted in the Haley's case to decide whether cash loss is the revenue loss or the capital loss. The court decided that all the cash in the group was the day-to-day business money, and that means that the circulating part of the circulating capital. If any loss or the damage to the circulating capital is the revenue loss, then categorized as outgoings and allowed the expenditure as a deductible expenditure. Department loss the case. The principle is whether it is a revenue nature or the capital nature. That means again the formula applied is whether money is represent circulating capital or the fixed capital. The employer worker money is normally we are not allowing. These are related to fixed capital, but all the bad debts also we are not collecting, and the debtor become the bad, then it cannot be collected. We allowed as a bad debts. Why? All these are related to the circulating capital, or that is related to the stock in trade if the sales are involved. But in case of banks, the loans are, that is their business. Customer advances, they are loan. These are then become the bad, they can claim. Right. Specific person 600, Mrs. Suresh Silla. Right. For a general person, no one specific. But specific person, bad debts. But say the person can be correctly identified. We know this business has become now bad. Still they are running the business, but not in a person to recover. But we know sometime we may be able to collect. In that cases, we can make a special provision. But when it is received, we take it as a income. Till that we can allow the specific provision. But bad debts written off. Say that the one debtor has died, we are not in a position to collect. Or if the debtor is there, he cannot be fined. If close the business, vanish, gone, then cannot be collected. Again, the debt amount also is small. Taking legal action is not worth. Then companies are normally write off as a debt. That type of debts are allowed. Normally, the department asks bad debts we are normally asking whether he is live, he is doing the business, or have you taken legal action against the recovery taxes like that way. On that asking question, we allow the bad debts, right? In case of banking business, we have given some restriction only for a very specific business. Bad debts claim is restricted to some percentage, 2% or the 1% of the amount of debtors, right? Donate temple, right? Then just you said normally there are donation we especially describe when we compute the taxable income. Only donation, here we know, special donation 500,000 made to the Gangarama temple, which is an approved charity. Donation made to the temple 50,000. Say again here donation 500,000 Ministry of Education, right? See, depreciation of fixed asset was 650,000. This is not a deduction, right? These are the normally this type of expenditure, clarification he has given. Interest paid of 300,000, housing loan including interest expenses charged to PLC. This housing loan is a private expenditure, but it still go on to the business, right? He has provided some information also. Computer during the period, Parliament assets have also been purchased. Computer hardware 400,000, locally developed accounting software 200,000, manufacturing machinery 600,000, office furniture 80,000. See here I have given the local developed accounting software. Then entered 100%. If it is a foreign imported one, 25% is allowed. Computer we are allowing only for 25%. Machinery we are allowing 33%. Office furniture 20%. Right. The other things. So now we learn how to. Now we have to learn this other information we need in later stage. Now we are given the information related to the JF industries. You see we have to column on that way. See all we have to note this one. Each and adjustments allocated some marks in the exams. Even any exams, even chart accountancy or all other exams, marks are given on that basis. We all know that one. Say loss aspect, we have two columns for plus and minus. Here, since there is a loss in minus column, if it's made a profit, we put in plus column, right? Say cost of improvement A, 150,000 we have added it. Why? Let's see why the note A we have given it. Nature of capital, not allowable deduction. Nature of capital, not allowable deduction. Right? Take that one. Now capital allowances, see. We take on that we see the research expenses 1,600 cannot right. Say what are they has given for a research. See the expenditure incurred for the product development research expense was rupees 800,000. The rule is we are allowed 300,000. The 800 is already charged. Now another 200,000 is entered the claim. Right? See, we have allowed another 1.6 million. And 800,000 already charged it. Say the advertisement again. See we got 680,000, 280,000 the allowable deduction. We collect the 400,000. Actual address is 400,000. We disallow 100,000. EPFP is see the allowable, no any adjustments. But we still allocated marks. Why? We are evaluating the knowledge. The student must know, candidate must know whether it is allowable or not allowable. Right? Employee loan. See the bad days we allowed. Foreign traveling. See foreign traveling. See the least. See foreign traveling. Aluminium. See, aluminium body 500,000 capital we disallowed, right? Private traveling not allowed deduction. Private allowance is depend on this. See the capital allowances now. Lorry 200. Why? Lorry cost of purchase 200,000. 500,000 is the aluminium body. Then total is 2.5 million. Then allowed 20% of capital allowance. The computer 400,000 allows 25% and 400,000. Local development 100% we allowed. Right? On that way we are allowing capital expenditure. If we have given information saying that the assets purchased during the past years, then we have to allow capital allowance for that one. Or for expense I have given this one. say if the information given during the last year also 5 million worth of lorry had been purchased and used in the business, then 5 million also entitled for the capital allowance. Then you have again capital allowance to be allowed. Say that now adjusted profit. See the lease rental, car lease rental not allowed. Say I said no capital allowance for the car or the lease or the car. Why? Car is used for the traveling purpose. If it has given double cab has been purchased and used for traveling, no allowances is granted. If I say car has been purchased and is pure transport of secured good, then a capital allowance is allowed. Why? It is used for a business or for the traveling. See the total lease for 4,000 1.9 million. Claim for the year is 34,000. Disallowable part is this 96,000. Right? On that way we have to 1.9 million, 38,000, disallowed 408,000. This is the adjustment we have to lease rental, or we have to exchange the 1/5 of the total lease value. The amortization of even if we recently introduced this law, in some cases a lot of companies purchase the patent rights and all. They are paying big amount for the once, and that type of income become the intellectual property. We are categorized is in other. Then that type of expenditure is normally amortized over the period of time, intangible assets, right? But allowances, 10% allowances is now allowed. Yes, say that if the company policy is they amortize the value is within 5 years, that means they 20% they charge for the period. But in that cases we disallow that amount and allow only for a 10%, right? Amortized patent rights we have added and allowed the lease rental 30,000. See, 300,000 is the 300 million. Only they have charged 6,000, but 10% equal to 10,000. Capital allowances, research, the bad debts, foreign traveling, donation to temple. These are not allowed. Only even donations to government are not allowed. But donations are we separately discuss when we compute the taxable income. There is other concept we have to discuss as statutory income, taxable income, and assessable income. Right? We have the other lecture in 4:15. No, for that I'll the close for the day. We all are requested to read all these four Word document to PowerPoint document. You can get some idea for the how to compute the other source, how to compute the adjusted profit for the tax purpose. Also, you can idea how to compute the the aggregate of the other income in order to compute the statutory income. Right? Thanks. That is. I need your help.